India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC TV18 Motilal Oswal studios. Overnight, not very much. This morning in Asia, a fair bit. That's the best way, I think, to put it. We'll get on with it and we'll tell you what's important as far as markets are concerned. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. Surabhi and Nigel with me. Guys, hi, good morning.
Hi, good morning. And I guess markets are still in feel-good mode because we have more central bank action and despite everything that's happening in the Middle East, and that really was catching my attention because at a human level, things seem to be going a little haywire over there. But at a market level, I think, it's still the party going strong.
I mean, party is going absolutely strong. No two ways.
Well, that's right. And today, for the first time, we're going to go to 26,000 odd. You know, I wasn't here in 2008 and 2009, but you all would have seen 2,600 as well. And today, 26,000 odd. So it's going to be a bit of a landmark.
Absolutely. Although I would say that, anyway, I'll tell that story. It's too early in the morning to tell old stories.
I'm all yours already.
Okay, anyway, so let's rewind the clock back and tell you what you need to know as we begin today's session. You've got basically a very, very lackluster overnight day, right? Nothing. S&P was up about 0.25%. Nasdaq was up about 0.14%. So these are nothing kind of changes. Volumes were muted. So if you look at the NYSE, compared to the 20-day average trading volumes, they were down about 10%. No big directional drivers. There was lots of Fed speak, which I'll lay out in a bit. 10-year was unchanged, 3.75. The dollar index at about 101. You had the U.S. manufacturing PMI numbers, which came. They were soft, but not soft enough to invoke fresh growth concerns. Actually, services PMI, which is more sticky. Actually, services inflation is more sticky. But the services part, which is the larger part of the U.S. economy now, like most countries, that actually was much better as compared to the manufacturing side. I said lots of Fed speak. So we had Fed's Goolsbee, who said that rates still need to come down significantly. Bostic and another gentleman said that 50 basis point is not the template for future cuts. So they kind of echoed what Powell has said, that don't take every meeting to be a 50 basis point meeting. Oil cooled down a little bit, down about 0.6%, at about 74. So that's essentially what happened, or what did not really. It was very, very quiet. Let's put it that way. And, all the headlines are the Middle East, and Surabhi will talk more about that in just a bit. In terms of actual price movement and price action, did not amount to very much. Oil actually ended slightly lower. Just to circle back the levels for the Nifty, the question is, will 26,000 act as a bit of a psychological resistance for the market? It's possible that it does so, but logically, the next targets that you got to look at, and the way to do it, because you're in blue sky territory and the market can go anywhere, is essentially to look at, for example, 26,245 is the 100% projection of the last move that we had. So that's the first target for the Nifty, which is 26,245 once we take out the 26,000 levels. Now, on the downside, we must not break the 40-hourly exponential moving average, which is about 25,586. And that must be respected. Bank Nifty has gone up for 8 trading sessions straight. So it's been a very, very strong market for the banks and financials index. It's been the underperformer, made new highs fairly recently. So there is room there. In the near term, the Nifty Bank can move to 55,615. That's the first level. Let's get there and we'll talk more. On the way down, the important support, again, like the Nifty, is the 40-hourly, which is 53,080. So these are some levels that I wanted to put out. I mean, it's looking a pretty decent kind of a day with, of course, help coming in from China earlier today. GIFT Nifty will come up on your screen. It's indicating about a 65-watt point higher start. Surabhi.
Absolutely, Prashant. Because of China's moves, I mean, all of Asia is a nice shade of green throughout. Two major central banks that we're talking about over here. First, the PBOC. Now, the interesting aspect was that there was actually a press conference, which usually never happens with the Chinese central bank, but maybe they took a cue from the Fed. It is, of course, a season of big central bank moves. So what do we know? the PBOC has done a couple of things. One, they've lowered the reserve requirement ratio by 50 basis points. The governor in that press conference hinted that more cuts are coming on different parameters. He said that there could be another 25 to 50 basis points that they do on this RRR by the end of the year. Not just that, he also hinted that the loan prime rate, the 1 year or the 5 year, I mean, didn't indicate which one, but they could also be lowered by 0.2% to 0.25%. And that's the benchmark rate when you're talking about Chinese monetary policy. The 7-day repo was also lowered. So lots of easing from China with promise of more, and that's really powered up not just mainland Chinese markets, but Hong Kong, and like I said, the rest of the neighborhood. We'll also have the Australian Central Bank come out with its rate decision today, and no change is expected over there. Quickly moving on to geopolitics. Now, you would have been watching the news overnight, and those headlines are getting more and more dire because just in terms of the human cost, we're talking about almost 500 people perhaps reportedly killed. 492 was the last figure that I checked, in various sources. Over 1,500 wounded. But none of this has actually led to a move on oil, as Prashant mentioned. Very range-bound, though there's a bit of an upbid once again this morning. Oil prices are up about 0.5%. And gold also seems to be reacting more on the stimulus and the fact that there's so much money in the market, maybe more than the tensions in West Asia. But for what it's worth, we should also bring up the price of gold because it's just moving like a rocket. 2650 has already happened on spot gold. That's how quickly the gold markets are reacting. And of course, oil continues to be in a range, but the bias is on the upside, closer to 75 on Brent. Back home, well, no problems here whatsoever. The rally continues to cruise along. However, we had another caution coming in from SEBI. Their latest report, remember the first one caused such a flutter, caught a lot of headlines on the F&O market. Well, they've come out with the latest study, and this talks about FY24 as well. And the numbers have only gone up. They're saying 91.1% of individual traders actually end up losing money in F&O. That's what happened in FY24, and 93% lost money if you're looking at FY22, 23 and 24, all 3 years put together. And SEBI is saying only 1% of the individual traders managed a profit of more than 50 lakhs. And actually, while a lot of individual traders kept losing money, it's the institutions, people who are running their prop books and institutional investors, they are the ones who managed to end up with some gains. So anyway, let's see. That's a bit on the sentiment side. Quickly coming to the fund flow picture. We don't have a massive FII buy number like we did on Friday. Yesterday's buying was a little more measured, 400 crores. Domestic institutions were also on the buy side. Short point, the Qs are positive, whichever way you look at it, and the flows are coming in. So, Nigel, who's to say? Who's to stop this party?
Well, that's right. And the rollovers are picking up as well, getting into the monthly expiry that plays out later. And the rollovers, if you compare it to the same time of the last series, the previous month, well, it's a little bit higher than what we have seen. Today, you have the Nifty Financial Services Index that will play out its weekly expiry. And the client, as well as the FI positioning, well, they're on the opposite ends of the spectrum, which I'll get to in just a bit. The Nifty moved up yesterday, but the VIX as well is creeping up. And sometimes that indicates a bit of caution in the near term, or some kind of consolidation is what we could brace ourselves for. You could argue that the VIX is bouncing up from bombed out levels, but it's bounced close to around 15% from the recent lows or thereabouts. What do the FIs do? They added 12,000 long, 12,000 short contracts. They continue to remain net long, with close to 75% of their positions on the long side. Let's pull up both the client as well as the FI positioning. Now, the clients are net short. That's the highest we've seen in the last 2 months. The FIs are net long, and that's the highest we've seen in the last 2 months as well. And sometimes you see when this sort of a picture, plays out, you could see some consolidation or maybe a minor pullback as well. So we'll have to keep an eye out on that. The PCR I mentioned yesterday had moved to the upper end of the range. It's still hovering around 1.4 odd, which is still towards the upper end. Options data comes up for you on the screen. The call writers, they seem to be trying to protect higher levels. Let's see if they get stumped out on the wrong side, because both those two calls were fairly active in yesterday's trade. The 26,000 mark, well, that's there today, and we could see it in the first few minutes itself. But I think at around 26,050, well, that's where we could see some resistance going by the options data. Support comes in at around this 25,700 odd, but the markets are firmly in an uptrend till the near-term line in the sand, that's a 20 DMA, does hold out. Moving to a couple of other data points, the Nifty Bank, that's found its form. In the last 1 year, it's actually been a bit of an underperformer. In the last month, last week, it's actually been the outperformer. And that needs to lead from here on if the markets need to trend up. The sector that I'm looking at besides the Nifty Bank is going to be the metal index, because of the commentary coming in from the PBOC chief, as well as the other comments that come out of there. Supported for the stock market, supported for the economy. If that's the case, then the metal index is something you keep on your radar. And two stocks I'm looking at. RBL Bank, it comes out of the F&O ban, so we keep an eye on that one. And VIP Industries, influential investor Mr. Kedia has checked in out there, been a rank underperformer if you compare it with what it's done with Safari. And also they have a couple of big investor meetings that are lined up later this week. So VIP Industries, after a big underperformance, it's another way of playing the travel and tourism theme. So let's see how that goes. We'll keep an eye out on this one from here on.
Yes, that's a very interesting check-in to VIP. Nigel, thanks for putting that on the radar. So definitely a stock that we'll watch out for. Well, let's kick off the proceedings with the equity call of the morning. Herald van der Linde of HSBC believes that India continues to offer a strong and stable earnings growth story. He says demand from domestic investors provides liquidity and limits downside. But cracks are emerging. He adds banks are struggling to hold on to deposits as everybody flocks to buy stocks, and this impacts their earnings. But this will not derail the market yet. Herald says foreign funds are at a record high underweight on India.